As Dower mentioned, I'm Gary Franklin, and I'm with the Reznick Group. What I wanted to talk about today was, here's a quick summary of what I'm going to go over. A legislative summary of what's going on from a federal standpoint primarily, but some DC related issues. The HIRE Act, qualified high-tech companies, enterprise zone employment tax credit, domestic production activity deduction. So those are the few areas that I'm going to cover today. And as Dower has mentioned a few times about the Bush-era tax cuts, we were about a year ago, in mid-December of 2010. You probably remember all the stuff in the press with what are we going to do with the extensions that, well, the Bush tax cuts that were due to expire. Oh, I'm sorry. Which the Bush tax cuts that were due to expire. Those were extended for 2 years, which would take us through 2012. There are a number of things, though, in those laws that are going to expire, some things that will be changing. So there are some things on the horizon there that we'll have to stay tuned to. The next item here, business, is as far as relates to Section 179. 179 is an area of the code, the federal code, that allows you to deduct in the year of purchase acquisitions. This was for 2010 and 2011 was $500,000, and then once you hit the $2 million mark, in other words, if you purchase $2 million or more, it starts phasing out dollar for dollar. So, for example, if you purchase $2.5 million of equipment, this would be in 2011, you would in effect be phased out of the ability to take that Section 179 deduction or write that off. There's ways around that through bonus depreciation, the next item. Bonus depreciation for part of 2010, as you can see, from September 9th at least, through the end of 11, was you could write off basically all your purchases, qualifying assets as it relates to bonus depreciation. You could take it or write it off in 1 year. That reverts back to 50% of that number for 2011. For 2012, excuse me. And one other thing to note on the Section 179 is they have expanded the definition of that. In the past, it was pretty much just personal property, equipment, furniture, etc. And they have expanded that to include leasehold improvements. So there are some rules in there just to bring your attention to. And if you have a restaurant, or if you're doing build out, like if you're to fit out this space in here, those qualify within certain limits and whatnot. As well as other retail properties. So just something to note if you're in that line of business. The next area is the HIRE Act. This was, as you can see by the slide, was something that was passed in early 2010, actually 3/18/10. And what this was passed for or enacted was to get employers to help out with the unemployment rate, to hire unemployed folks. And if people were hired between these dates, February 4th, 2010, and really actually it's by December 31st, 2011, by 12/31/10, so in other words, in 2010, if you were to hire someone that was previously unemployed and had not worked more than 40 hours in the last 60 days, so it's pretty liberal, and they just sign an affidavit, this W-11, and just put it in their personnel file. There's nothing to file with the IRS. It's just there for audit purposes if you were audited. The reason why this slide is on here this year is more so for the second bullet point, the tax credit of $1,000 per worker. And what that is the employer is eligible for a $1,000 credit per employee that meets these requirements that you paid as long as they've been with you for 52 weeks or more. The next area is that I'm going to chat about is the qualified high-tech companies. This is basically a collection of incentives to help reduce the cost of doing business as a high-tech company in DC. And there's a number of rules to qualify for this. It's pretty involved, but basically you have to be an individual or an entity. You have to be for-profit. You cannot be a not-for-profit. You have to maintain an office in D.C. or headquartered in D.C. where you're doing business, 2 or more employees. So there's some rules like that. There's some income limits and whatnot where your income is coming from and who it's coming from. The benefit is from a corporate franchise tax standpoint, the first 5 years are abated or there is no tax. And then once you get into that, the DC rate is approximately 10%. They reduce it to 6%. So there is a benefit there, almost a 4% savings. There's a partial exemption for personal property tax the first 10 years. After that, there's a property tax, but it's on a reduced amount, like most property tax works. There's exemptions for sales and use tax for purchases of certain high-tech equipment. There's deduction for Section 179. That's a federal extension. Most states decouple, meaning they don't allow it. It's an add-back for state purposes. But in this particular case, they'll give you the first $40,000, which is a benefit, something you wouldn't get normally. And then there's also some wage and relocation reimbursements that the employer or the company is eligible for. For example, if a qualified employee, which is someone working 35 hours or more, relocates their employment, let's say from Maryland to DC, then there's credits out there up to $5,000 per person. There's some limits around that, but per employee. And then if they relocate into DC for employment and residency, it goes up to $7,500. So there are some benefits out there. There's a lot of benefits out there for employers that will help them. And the other item that is not up on the slide, which is something to take note of, if you are one of these companies that does qualify and you were to sell the business, the stock, the assets, etc., as long as you've held them or operated for 5 years, you're not subject to capital gains tax in DC as far as your DC portion of that tax. So that's a pretty big benefit. The next item is this enterprise zone employment tax credit. This is a federal tax or a federal credit that relates to DC employees or DC residents. I did get something across my desk last week that mentioned that this particular credit expired 12/31/11. So as of right now, it's not around for 12, but through 11. So I guess kind of stay tuned for that, or if you're looking to take this in 12, obviously talk to your accountant, advisor, check the law as you get further into it. But the advantage of this credit here is if your business is located in one of these enterprise zones, and you'd be surprised where a lot of these are. I have a client right down on K Street under Whitehurst Freeway, and they are able to get the maximum credit. The credit is set up where it's 20% of the wages to a maximum of $3,000. So once you get above $15,000 in wages, there's no more benefit. But it is a credit. A credit versus a deduction is a dollar for dollar reduction. The last item that I have, or the last slide I have here, has to do with the domestic production activity deduction. This is a deduction. It's been around for a number of years. Early on, the rates for this, it's 9% for this year, and I believe it was 9%. I think it was 9% last year as well. But this has been around for quite a few years, probably about 6 years. It started out, I believe, at 3%, and then about every 2 years it went up to, say, 5%, 6%. So it was kind of small. It really involves a fair amount of record keeping for the business. But if you are one of these qualified contractors, builders, or fall into this vein where you can take advantage of this, engineers, architects, firms, anybody that's really producing in the U.S. for U.S. consumption. It could be a printing company. I have an architectural company. I got a printing company that we do take advantage of this. And basically, you take this domestic production activity income that's generated from these goods, and less the expenses associated or attributable to them. And that number, loosely, there's obviously some other things go in there, but basically 9% of that number becomes your deduction. Now, it is the lesser of. It's 9% of that number or 50% of the wages, W-2 wages of the people, your employees, that is. Once again, it's a deduction, not a credit, so that would just flow through their individual return above the line. But, whatever their tax rate is, say it's 35%, and if they're getting some amount through that, there is a benefit. So it's something to look at since the number is now 9%. When it was 3-4%, it was probably more of a more involved and more of a headache to go through the process. So we didn't typically get too involved in that.